Hey guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're looking at this morning. So clearly we have a lot to get to, as we get into a brand new trading week. But first up, let's take you through what's happening as far as the global markets are concerned. We definitely got a weak handover from Wall Street on Friday. And on the back of that, you have all of the Asian markets which are trading with some cuts. Everything barring Straits is in the red right now. And this is after we've seen some kind of recovery play out in the past few minutes. So the Hang Seng is seeing the sharpest cut right now. It's down 0.9%. Taiwan is up on your screen. That one also looking quite weak, trading with cuts of around 0.8% right now. The Japanese Nikkei market is seeing cuts of 0.6%, and this is after we've seen around a 120-point recovery play out in the past half an hour. So do keep that in mind. And we are seeing similar cuts across all of the Asian markets. So if you take a look at Shanghai, that one is down around 0.25%. You have the Kospi markets also, which are trading with some cuts of around 0.8%. So across the board, weak opening for the Asian markets, and the SGX Nifty will also come up for you. That once again indicating that the start for our own markets after the kind of 200-point downtick that we saw on Friday will be in the red, around 73 points lower on the SGX Nifty. So that's what's happening as far as the Asian markets go. But let's also talk about the US then. Wall Street ended Friday's trading session on a weak note. So the Dow Jones was down 0.9%. The S&P 500 ended around 1% in the red. And the Nasdaq Composite, that's where we saw the big underperformance play out. That was around 2% lower at the end of the trading session. CNBC Sarah Eisen is standing by with all of that action from Wall Street.
The major averages ending on a sour note, with rate hike fears resurfacing, ending the S&P 500's 4-week win streak. The Dow ended the day just down under 1%. S&P slid over 1%, but the tech-heavy Nasdaq got hit the hardest, dipped right around 2%. Warren Buffett's Berkshire Hathaway received regulatory approval to buy up to 50% of oil giant Occidental Petroleum, boosting shares 10%, pushing Occidental's 2022 gains to over 140%. The move also fueled speculation that Buffett will eventually be interested in acquiring the whole company. And the nation's largest employer, Walmart, is expanding its abortion coverage for its 1.6 million employees. According to an internal memo, and effective immediately, Walmart's healthcare plans will cover abortion services and travel costs for employees and their family members who are insured through Walmart when the pregnancy presents a health risk to the mother. That's the action from the U.S. market. Back to you in Mumbai.
All right, Sarah, thanks a lot for getting us all of that action. So it's clearly all of this commentary coming out of the Fed, from the Fed members and the FOMC minutes that has got the street worried. In fact, we spoke to Eddie Yardeni of Yardeni Research about the Fed's possible move going forward. So let's listen in to what he had to say.
Clearly, inflation has to continue to moderate, and the Fed, in that context, should deliver one more rate hike in September and then pause to see where we are. I don't think the Fed's going to be lowering rates next year. I think the Fed's going to raise them to around 3% and then probably keep them there. I think we're going back to a much more normal environment. I don't think we're going back to zero interest rates, and I don't think we're going to get back to 2% inflation rate anytime soon. I've been thinking that there's a much greater likelihood of a recession in Europe and in China than there is in the United States. And that's obviously going to have an impact on us in terms of bringing the economy down through weaker exports. However, it's the good news in their misfortune is that's likely to bring inflation down on a global basis, which helps us quite a bit.
All right, that is some important market opinion that we're tracking. We've taken you through what the global markets are doing, but let's now take you through everything that you should track as far as our own markets go. We have Rima as well as Nigel joining us to take us through the trade setup as well as all of the stocks that you should be keeping on your radar in this trading session. Guys, a very good morning to both of you. And Rima, let me come across to you first. We were just going through the global setup, and that's definitely not looking so positive, but take us through everything we should track.
Well, the global equities seem to have lost momentum last week, towards the end of last week. So U.S. markets corrected on Friday. The Dow was down 0.8%, the Nasdaq losing 200 points, 2%. And we saw a similar trade even in the Indian markets, where the Nifty Sensex snapped that 8-day winning streak. There was major selling which came through, especially in the second half of the trading session for our markets, and the Nifty finally ended with a cut of 200 points. So you can get a sense that after this 2 months of a relentless one-way up move without a pause, markets are looking to take a breather, and there could be some amount of profit booking that we will have to deal with. We've also got the August expiry this week. The broad range for the markets is 18,000 on the upside, a level that we could not conquer last week. And on the downside, 17,500 is seen as a support level. The FI inflow in the market continued. So on Friday, the FIs bought 1,100 crore in cash, but the DII selling was more. The DII sold 1,633 crore. So the net institutional figure was a sell. In terms of important macro data as well as events, the RBI MPC minutes were announced on Friday post-market hours, and they signal that more rate hikes are coming, though they will be data-driven. And the global event to watch, the key event, will be the Jackson Hole Symposium, which will be held on Thursday to Saturday.
All right, Reema, thanks a lot for running us through all of those cues. But we're also coming out of the weekend, which means there's lots of stock-specific action that you can fill us in on. So take us through the individual names that we should keep on our radar.
Well, I'm watching Adani Power to begin with because they will be acquiring DB Power's thermal power plant for a little over 7,000 crore rupees enterprise value. Shilpa Medicare has completed phase 3 human clinical studies of the first biosimilar adalimumab. ICICI Bank annual report was out. Brokerages have analyzed it. Kotak Institutional Equities has raised the target price of 1,025. The FTSE rebalancing was also announced. Well, contrary to expectation, Kotak Mahindra Bank didn't get included. What got included was Bharti's partly paid up share post those rights issues, Paytm, HAL, Tata Elxsi. On the exclusion side, there were many, but Vodafone Idea, Aurobindo Pharma, SAIL were some of the names. Greenlam Industries has also commenced commercial production of a laminate facility in Gujarat, which can contribute close to 150 crore to their annual revenues at full capacity. So that's another stock you should keep on your radar. Back to you.
All right, Reema, thanks a lot for running us through all of these individual stocks that we should watch out for. We're going to keep all of these on our radar. Finally, let me hand it over to Nigel, who's looking at all of the cues from the futures and options space. Nigel.
Well, morning. There are three broad factors coming from the global cues which are making things a little bit jittery. One is that the US bond yields, they have spiked a little bit. The second factor is that crude oil prices is moving back towards the $96, $97 per barrel, a far cry away from around that $130 per barrel. But still, it's moved up marginally. The problem is the dollar index. That's at the highest we've seen in multiple weeks, and that's moving to around $108. So all those three factors globally, that's a bit of a negative for the Indian markets. In terms of flows, the FIs, they bought, but the DI selling outweighed the FI buying. So two observations out here. One is the FI net buy number. Well, it's close to 20-25% lower than what we have got used to seeing on an average for August. The second factor is we had institutional net buy numbers all along. Now you have an institutional sell number that did come in. That's the FI and the DI together, close to around 500 crores odd. The average for August is a net buy number of around 1,000 crores odd. From the F&O market as well, a couple of observations coming in there. The Nifty had spiked up close to around 1,000 points odd in the August series itself, but the total open interest moved from around 10 lakh to around 15 lakh odd. So it was getting too heavy, in terms of the total open interest on that front. So bracing for a bit of a correction, and that's what happened on Friday. Even the premium, well, it was around 30-40 points odd. That's come down to around a point odd. What did the FIs do in the F&O market? Well, they added more shorts. They added close to around 13,000 short contracts. And after a while, they're net short on the index now. Close to around 52% of their positioning is on the short side. On the option side, well, they're buying both puts as well as calls. But what's making things a little bit jittery is the way they wrote calls in Friday's trading session. Close to around 160,000 contracts were written. And the 18,000 call, 17,900 call, both of them very, very active. So putting all these data points together, what are the levels you're looking at? The range is 17,500 to around 18,000. Let me explain that in further detail. Resistance is at around 18,000 odd. On Friday, we almost went there. Highest open interest as well as at that mark. So that's important. Now for the August series itself, the average buy price, that's around 17,400 to around 17,500. So that's what makes supports very, very, very important at around 17,500. And if we break that level, then you move to around the 20 DMA, which is up for you on the screen. SGX Nifty is indicating a pullback. Only for the those who have higher risky trades, well, maybe buying closer to around that 17,600 odd could be a one for the ones that could take that sort of risk. Otherwise, expect some bit of consolidation. Back to you.
All right, Nigel, as well as Reema, thank you very much for joining us and taking us through the trade setup. So for now, we have around a 70-point downtick that we're seeing on the SGX Nifty. Let's see how we go from there. Back, you're still watching Power Breakfast. Now, before the break, we were just talking about how the FOMC minutes sound quite hawkish, but that's not all. In fact, inflation worries dominated the last monetary policy meeting of the MPC as well. So according to the minutes of the meeting, the RBI governor and the RBI members sound more hawkish on inflation than the external members. One external member, that's Jayant Verma, says that the MPC stance of withdrawal of accommodation is confusing. Lata is here with more on the minutes and what really it could mean for future policy decisions. Listen in.
Well, one key takeaway clearly is that the Reserve Bank's members in the MPC sound a little more concerned about inflation than the external members. The governor in particular clearly saying that now once they move within the 2 to 6% band, they should start moving towards 4. So that clearly sounds they are more concerned about inflation and its second round impact on inflation expectation. Among the external members, Dr. Verma's dissent to the accommodative removal of accommodation stance seems to be more a dovish dissent, but he clarified that he dissented more because the stance sounded confusing to him. In fact, he seems to be rooting for more clarity by asking the members to vote on a dot chart like the FOMC, which other members were not agreeable. A third takeaway is that Ashima Goyal seems way more confident about the growth part, saying that even exports may not be hurt so much by recession. However, Dr. Shashanka Bhide, the main takeaway seems to be that he has some concerns on growth, that exports could be affected by recession, and some concerns on inflation because a lower kharif can continue to impact inflation. The net from the minutes, one can only say that we are not any the wiser that we were after the August 8th policy statement. It does look like one more hike in October is definitely on the cards because the Reserve Bank will have to write a letter to Parliament explaining why it failed in achieving a sub 6% CPI for 3 quarters in a row. So a hike definitely looks on the cards in October, but that is exactly what we thought at the end of the August 8th policy statement itself. The minutes are not going to change the market's mind on anything. They will continue to expect a few rate hikes, definitely one in October, but nobody expects that the Reserve Bank will go on hiking all the way till 6.5% or 7%. So it really is a reiteration of the status quo after the August 8th policy.
All right, Lata, thanks a lot for running us through the fine print. In fact, Lata was just alluding to what some of the external members of the MPC, Jayant Verma, Shashanka Bhide, as well as Ashima Goyal had to say regarding the last MPC meeting. So let's listen into that.
Monetary policy, we know, acts with lags. And there is nothing that we can do today that would avoid a failure if that is really around the corner. We have to be focused on what is the likely situation 3 quarters ahead, 4 quarters ahead. We cannot be, we cannot be reacting in a knee-jerk fashion to this.
In the past, the spikes in food inflation have come from vegetables, particularly, I think. So I guess there are always those uncertainties attached to food inflation. But I think clearly for food inflation, the cereals are going to be important going forward. So both in the case of rice and wheat. So I guess there is uncertainty attached to this, but I think these are the concerns.
And if you see RBI inflation projections, they really rose because they factored in higher oil prices and higher fuel inflation in general. So if oil prices come in, then the inflation in the next few months is going to be much below RBI projections. Obviously, you will not need as much of a hike or as we've been having, or we'll have to see.
All right, that is what some of the external members of the RBI had to say. But like Lata pointed out, no real new takeaways from the RBI minutes. But with that, let's move on now and talk about the latest round of rebalancing of the FTSE. They've included Bharti Airtel partly paid shares and they've dropped Vodafone Idea, Aurobindo Pharma and SAIL from the index. The changes will come into effect on the 16th of September. And Sonia is joining us to take us through all of that. Sonia.
Well, thanks a lot for that. It's a very interesting move that we're seeing as far as individual stocks are concerned in the FTSE rebalancing. As you said, in terms of the additions, You have the Bharti Airtel partly paid up shares. Apart from that, there is a migration to large cap for many of the stocks, and the list looks pretty interesting. You have names like HAL, 197 Communication, Tata Elxsi, TVS Motor and Varun Beverages, and some of these stocks like Tata Elxsi and TVS Motor have done exceptionally well recently. Apart from that, in the migration to mid caps, we're expecting these stocks to be in the green as well. There's CG Power, Gujarat Fluorochem, which has had a spectacular rally up until now, Indian Hotels, Linde India and Schaeffler India. So keep an eye out on these stocks. And in the migration to mid caps from large caps, so these are stocks that perhaps have been, downgraded from mid caps, from large caps to mid caps. You have Aurobindo Pharma, Gujarat Gas, Lupin, NMDC, Star Health, SAIL and Vodafone Idea. So we're going with red over there. And there are 24 stocks that are added into small caps. So of course, the list is pretty endless. But purely for today, I would keep my eye out on stocks like TVS Motor, Tata Elxsi, Varun Beverages that have been added into the large cap list.
All right, Sonia, thanks a lot for taking us through all of that. But with that, let's move on and bring you some more updates. The Finance Ministry says that there is no plan yet to charge customers for payments made through UPI. So in a tweet on the official account last evening, the Finance Ministry said, and I quote, UPI is a digital public good with immense convenience for the public and productivity gains for the economy. There is no consideration in the government to levy any kind of charges for UPI services. The concerns of the service providers for cost recovery have to be met through other means. It also added that the government had provided financial support for the digital payments ecosystem last year and would continue to extend the same support this year as well. All right, some more updates that we should bring you up to speed on this morning, and this is from the Paytm annual general meeting. Paytm shareholders approved the appointment of Vijay Shekhar Sharma, that is, as well as the company's MD and CEO, but they have rejected the remuneration resolution for Vijay Shekhar Sharma, as well as the company's group CFO, Madhur Deora. So Paytm says that they remain committed to building a large and profitable company and to creating long-term shareholder value. So that's something else that we had to bring you up to speed on this morning. But some more action, and this is from the primary markets. PharmEasy's parent API Holdings has decided to withdraw its plan to go public, citing current market conditions. The company had filed its DRHP with the SEBI on the 9th of November of 2021, and the company instead is now considering fundraising via a rights issue and is expected to open in the first week of September. So those are some important news pieces that we should bring you up to speed on as we get into a fresh trading week. But with that, let's get into another short break on the show. Back, you're still watching Power Breakfast. Now, an important story we're tracking. Sources tell CNBC-TV18 that senior officials of tech giants like Meta, Google, Amazon and Apple, as well as Netflix, are due to appear before a parliamentary panel on Tuesday on concerns over anti-competitive practices. So Parikshit is joining us on the phone line with the latest on this. Parikshit, what are you picking up?
Well, over the last few months, the Parliamentary Committee on Finance has been looking at this subject. They have been calling different service providers, different companies. So, for example, in July, you had the likes of Ola, Oyo, Swiggy, Zomato, who had been called, even Paytm, which had been called by the Parliamentary Committee to understand how some of the practices of big tech companies like Google distort the market for them, hurt their profits, and also restrict their functioning as well. So now you have about 10 questions which have been sent by the Parliamentary Committee on Finance to the likes of Google, Amazon, Uber, Meta, and Netflix, and they have been asked to reply by tomorrow. What we hear is that the questions are on the lines of why such high fees are charged for in-app purchases, how they keep certain companies out of their services, also how some of the practices of Google may actually be restricting the market for other domestic players, how they may be distorting competition as well. So we will be seeing those 10 questions being asked and discussed in detail by parliamentarians tomorrow in that meeting. And senior officials, legal counsels, general counsels of these companies such as Apple, Uber, Netflix, Amazon, Google, they'll all be appearing before the parliamentary panel.
All right, Pariksha, thanks a lot for taking us through all of the details. So the meeting with the parliamentary panel is tomorrow, and we will, of course, track that and bring you everything that comes out of it. With that, as promised, let's move on and talk about the commodity space. Manisha joins us with an update. Manisha, crude is almost at 95 now.
It is. And, last week we did see some decline into the markets. It's seen some extended decline today in the Asian markets as well, as there is a belief that Iran and West could be close to striking a nuclear deal. There have been nearly 19 months of negotiations within this, and we seem to be reaching some kind of a concrete decision at this point in time. The decision is yet to be made official, though. Apart from that, the Chinese demand is yet to stabilize post the COVID-led restrictions. OPEC meeting on 4th of September is what the markets will keep an eye on. Also, the dollar index now at a 5-week high above 108 also seems to be putting pressure on commodities. So it's not just the crude oil prices. Take a look at gold and silver. We did see gold, silver prices decline between 3 to 8% in the previous week, and we have started with a decline this week as well. And is the case with the base metal prices also. So not many commodities trading in the green right now, and the binding thread clearly is a very strong strength in US dollars.
All right, Manisha, thanks a lot for getting us all of that action from the oil markets. With that, we're completely out of time. The Asian markets are largely lower, but they have recovered significantly in the past 40 minutes or so. In fact, Shanghai and the Straits Times are in the green right now. The SGX Nifty, however, indicates a negative start for our own market, so around 74 points lower on the SGX Nifty. Thanks a lot for tuning into Power Breakfast. Bazaar Morning Call is up next.